How's it going, everyone? My name is Dan, but you can call me Malone, and it's official. The government has unveiled Budget 2023. This is arguably the most important budget that the government has ever introduced, because leading up to this budget, there were lots of fears, uncertainties, and doubts among the Irish people, which the government needed to address. Inflation is still sitting around multi-decade highs, energy prices are putting households under significant pressure, national house prices have increased by percentages not seen since the boom, and the European Central Bank is continuing to increase interest rates. So let's talk about what the government is doing about it, because they need to get this right. Otherwise, Irish households could be facing another year of hardship. I'll explain all of the major changes which are being introduced, and at the end of the video, I'll give you my final thoughts on whether or not these changes are enough to solve the problems which we're facing, and what I'd like to see introduced in Budget 2024. Before we do that, can I ask that you take just 2 seconds out of your day to make sure that you're subscribe to the channel, and if you do enjoy this video, show your support by leaving a like and comment down below with your opinions on Budget 2023. Let's kick things off by talking about all of the changes which the government is introducing to address the cost of living crisis. Irish inflation stood at 8.7% in August, meaning you need about €108.70 today to buy the same amount of goods that €100 could have bought you last August. Energy prices have been a major contributor to this, with home heating oil, gas and electricity up 72.9%, 56.1% and 38.1% respectively in the past 12 months. Meanwhile, diesel and petrol prices are up 34.6% and 23.5% respectively. Food and drink, alcohol and tobacco and hospitality prices have also seen huge increases since last August. Naturally, this has put Irish households, especially less well-off households, under significant pressure, which the government needed to address. Households with children. There are a number of changes being introduced that will benefit you. First up, school books. Primary school books are being made free for all children on a permanent basis starting from September 2023. This will save you around €110 per child on average based on today's prices. For those with younger children, childcare costs are being cut by 25%, meaning on average, yearly childcare costs will fall by around €2,100. Ireland is the third most expensive country in the European Union when it comes to childcare, with the average two-person household spending 20% of their income on the cost. Things get even more expensive for those living in the capital and for those with young babies in childcare. The government has clearly prioritised this, as it's expected that the childcare budget will reach €1 billion next year, which is 5 years ahead of schedule. For families with children in third level education, the maximum student contribution is being reduced for this year from €3,000 to €2,000. That equates to a saving of €1,000 per child, where families are paying the current maximum contribution amount. Going forward, families earning less than €100,000 will see the student contribution fall from €3,000 to €2,500, i.e. a saving of €500 on a permanent basis. Families earning less than €62,000 will see the student contribution fall from €3,000 to €1,500, i.e. a saving of €1,500, again on a permanent basis. Budget 2023 also introduced a slew of once-off measures valued at €4 billion to tackle the cost of living crisis, which is about 36% of the total budgetary spend. Some of the most notable measures include electricity credits for all households amounting to €600, which will be received over 3 installments, the first of which will come before Christmas. A double payment week in October for social welfare recipients, in addition to the normal Christmas bonus paid in December, and a payment of double child benefit in November valued at €280 per child, among other once-off payments relating to the fuel allowance, living alone allowance, Susie Grant payments, and many more. Michael McGrath gave the example of a pensioner who is living alone and claiming the fuel allowance, receiving an extra €2,375 by the end of 2023 because of the once-off measures introduced by the government, as well as the amendments to the social welfare system, which we'll talk about in just a minute. Perhaps the most significant change being introduced that will benefit all taxpayers earning more than €36,800 is the increase in the standard rate income tax band to €40,000. Currently, every euro earned above €36,800 is liable to income tax at the higher rate of 40%. The change introduced by the budget will see to it that Irish taxpayers only pay income tax of 40% on every euro earned above €40,000. So the entry point to the 40% tax rate is being increased by €3,200. What does that mean for you? Well, if you're currently earning more than €40,000, which the average Irish person is, the change will save you €640 in income tax. If you're earning less than €40,000 but more than €36,800, you'll save anywhere from €180 to €620 in tax. If you're earning less than €36,800, the change won't impact you. In addition to this, the personal, employee and earned income tax credits are all increasing by €75. Given that most individuals will be claiming 2 out of the 3 credits, that results in another €150 in tax savings. Finally, for anyone earning more than €22,920, there will be a tax saving of about €40 from the changes to the second USC tax band. So cumulatively, an individual earning in excess of €40,000 can expect tax savings of around €830 as a result of these changes. It was also noted that the proposed 30% rate of income tax has been deferred until 2024 in order to allow for time to implement the system updates necessary to facilitate such a change. The reason why the government has introduced these tax changes is to address the so-called squeezed middle class, which Leo Varadkar referred to during the summer. Essentially, you have the average Irish worker earning a salary of around €45,000 paying the highest income tax rate at a very early stage. At the same time, middle class workers won't qualify for many of the benefits which are provided by the state. So what you have in effect is a class of workers who are paying a very significant amount of tax without receiving anywhere close to the lion's share of the benefits offered by the state. That's why in Budget 2023, we're seeing not only tax band changes which specifically benefit the middle class, but also changes which universally benefit households, not just less well-off families, i.e. the changes to childcare costs, third level education fees, primary school books, etc, etc. Historically, these changes might only have applied to the poorest of families, thereby excluding the middle class even though they're paying lots of tax, including PRSI, which entitles them to state benefits. Speaking of benefits, social welfare payments are set to increase by €12 per week, including the state pension. The state pension currently pays €13,171.60 per year to Irish retirees. This change will increase the yearly payout to €13,795.60, which is an increase of €624 or 4.7%. The changes to social welfare represent an attempt by the government to protect some of the real value of the payments being made to welfare recipients. As we mentioned earlier, Irish inflation in August stood at 8.7%, meaning if no changes were made to welfare, then welfare recipients would technically be receiving a payment cut of 8.7% between this year and last. So by increasing welfare by €12 per week, the government is shielding recipients from some but not all of the effects of inflation. Renters, you will be getting a tax credit of €500 per year, which is being awarded on a per renter basis, not a per tenancy basis. What this means is that you and all of your housemates will be entitled to receive the tax credit. The credit will operate by reducing the amount of income tax that you're paying by €500. In other words, you won't see a reduction in your rent, but you will see a reduction in your tax. The tax credit will also be backdated to 2022, meaning you can claim for it next year in relation to rent paid this year. The Residential Tenancies Board reported that between the first quarter of 2021 and the first quarter of 2022, national rent prices of new tenancies increased by 9.2%. So this tax credit is definitely something that is needed by renters. It's estimated that 400,000 people will benefit from the renters tax credit. Landlords, the government is doubling the amount of pre-letting expenses that can be deducted in relation to vacant properties from €5,000 to €10,000. In addition, the period of time which the property must have been vacant for is being reduced from 12 months to 6 months. The Residential Tenancies Board recently reported a decline in the number of Irish landlords, and there's been lots of talk lately about how it's becoming economically impractical to operate as an individual landlord in Ireland. Now, I fully accept that this is a topic of contention, but landlords are extremely important to the housing market in Ireland, and less landlords means less rental properties. I would much rather see measures introduced which encourage Irish people to make investments in the Irish property market and stay in the Irish property market than have some multinational investment fund come in and snap up the property which the Irish landlord is selling. This is the first step in the right direction towards striking an economical balance between the interests of landlords and tenants. In relation to property, a vacant property tax was announced which will be 3 times the local property tax rate applicable to the vacant property in question. A property will be considered vacant if there is less than 30 days of occupancy in a 12-month period, aside from special circumstances. The purpose of this tax is to increase the supply of homes on the market and to avoid a situation where a vacant property is just sitting idle. The Help to Buy scheme, which has reportedly benefited 35,000 individuals since 2017, is being extended until 2024. Again, this is the scheme which provides you with a refund of Irish income tax and dirt in order to help you with the deposit needed to buy or build a new home. Outside of this, the government reiterated its commitment to the Housing for All plan and noted that the funding being provided to the Department of Housing is at record levels. Businesses. There is a new scheme called the TBESS, that is the Temporary Business Energy Support Scheme, which will cover 40% of the increase in electricity or gas bills up to a maximum amount of €10,000 per month per business. Leo Varadkar has said that almost all businesses will qualify for this scheme. The scheme will only apply where your 2022 energy costs are 50% more than your 2021 energy costs on a per unit basis. If they are, the scheme will be available. The purpose of this scheme is to help employers with rising energy bills, thereby saving their businesses from potentially going under and supporting jobs. Separately, employers will also be permitted to grant employees a €1,000 tax-free bonus in the form of vouchers, which is an increase of 100% from the old limit of €500. This is definitely a great way to support your staff if it's a feasible option for your business, and it also applies to bonuses in 2022. VAT was another major focus for this year's budget. The 9% VAT rate, which was introduced to support the hospitality sector during the pandemic, is being increased back to 13.5% in March next year. Irish consumers have already noticed a significant increase in the cost of Irish hotels, so this change will only serve to make things more expensive. The VAT rate on newspapers is being reduced from 9% to 0%, while DFIBs and a small number of remaining vatable period products are also being zero rated. The 9% VAT rate for electricity and gas is also being extended until the end of February next year. Other noteworthy changes include the increase to the minimum wage by 80 cents, bringing it to €11.30 per hour. While the headline figure of 80 cents might get a lot of negative publicity, that does represent an increase of 7.6%. Considering Irish inflation is at 8.7%, and with Pascal Donoghue forecasting 2023 inflation at 7%, I think that's a pretty decent increase all things considered. The public transport fare reduction of 20% and the youth travel card discount of 50% are also being extended to the end of 2023. While there were no changes made to alcohol prices, the excise duty on cigarettes went up by 50 cents, with a pro rata increase being applied to other tobacco products. Interestingly, Pascal mentioned that a working group would be established to assess the taxation of funds and investment products in Ireland, which could potentially mean a change to the gross roll-up regime and the 41% tax rate and deemed disposal rules, which currently apply to the likes of Irish domiciled ETFs. Whether or not this will be a net positive to Irish investors remains to be seen. From a corporate perspective, the Knowledge Development Box has been extended for 4 more years to encourage innovation in Ireland, while the Film Corporation Tax Credit is being extended to 2028. That's the credit which results in the Irish harp being displayed at the end of many Marvel movies, for those who have noticed that. The Special Assignee Relief Programme is being extended to 2025, and the minimum basic salary required to qualify for the programme is being increased to 100 grand, which essentially limits the amount of overseas workers who are on assignment in Ireland that can claim the relief. The point was also brought up in respect of the massive gains made by energy companies as a result of the boom in energy prices. From the government's perspective, it isn't fair that these companies should gain while other companies are suffering. So they reiterated that Irish measures would be introduced, potentially in the form of a windfall tax, if the matter isn't addressed at an EU level. A windfall tax being a tax levied on an unforeseen or unexpectedly large profit, especially one regarded to be excessive or unfairly obtained. Budget 2023 has been described as the biggest giveaway budget in more than 15 years, and I think that's a fair assertion to make. This budget set out to address the cost of living crisis and the impact that it's having on Irish households. The government was quite generous with the savings that they awarded specifically to households with children. Free primary school books, commitment to significant reductions in childcare costs, extra child benefit payments, commitment to significant reductions in third level education fees, on top of all the other savings which stand to benefit many households, like the energy credits and the changes to income tax and USC. This, in my opinion, was the correct thing to do, given that families with children are under more pressure than most. Are these changes enough to solve the problems which we're facing? It depends on what problems you're talking about. If you're talking about solving the cost of living crisis crisis as a whole for everyone? Then no, of course not. But it would be unreasonable to expect that. The government has no control over the duration nor the extent of the cost of living crisis. If by next September the situation has worsened, then the government would need to introduce additional measures similar to what we've seen in this budget, just to ensure that our standard of living remains somewhat close to what it is today. But ultimately, we don't know what will have happened by this time next year. Plus, it's simply not possible to shelter everyone from rising prices, especially if we want our national finances to be secure. If you're like me and you're more so concerned with the long-term problems facing this country, then no, I don't think the budget has done anything to solve those long-term problems. For example, the problems facing our taxation system. You may or may not have seen the recent report published by the Commission on Taxation and Welfare, which Paschal Donohoe referenced in his speech. Essentially, they reported that, quote, Ireland faces major fiscal sustainability challenges, and over time, the overall level of taxation as a share of national income will have to increase. They go on to say that they want to see more people paying tax, they want to see higher taxes being paid in some areas, they want to see more taxes being levied on capital, wealth and consumption, and they want to reduce our over-reliance on corporation tax, as well as other improvements over time. Make no mistake about it, these changes are necessary and they are coming. The only reason why this budget was as generous as it was is because our 2022 corporation tax receipts are looking tremendous. 20 billion euro will be collected in corporation tax this year, which is 3 times what was collected in 2016. But the reality behind our tax revenues is that we rely on about 500,000 individuals and just 10 companies for 33% of our total tax revenue. That makes us very susceptible to a shock, which is why the Commission is recommending we reduce this over-reliance. It's also the reason why any proposals to simply tax the rich and multinationals in order to solve all of our problems hold no weight, because it's too risky to do so. The Commission specifically touches on the need to reform PRSI as a priority in order to increase the amount of money going into the Social Insurance Fund, which is what pays for social welfare benefits, including the state pension. If you've been paying any attention to what's going on with the state pension, you'll know that it's unsustainable as it currently is, and in order to salvage it, the government will need to increase the rate of PRSI, increase the retirement age, or reduce the benefits provided by the state pension, or indeed a combination of all of these. But no progress has yet been made. In fact, we've just increased the amount of welfare being paid. They also touch on the need to promote greater retirement savings at younger ages through tax policy. What this should tell you is that we're facing a major retirement crisis and future budgets need to start addressing it. Overall, I think it's great that the government is actively supporting people through the cost of living crisis, but my fear is that there will be a tendency for people to forget that this is a one-off budget. This really is as good as it gets, and to be disappointed with this budget in terms of how much was spent just reflects a misunderstanding of how budgets actually work. As Paschal mentioned, you can't use one-off surpluses like we're experiencing with our 2022 corporate tax receipts to fund permanent measures. To do so would be to falsely assume that those surpluses will continue into the future. That's why so much is being spent on once-off measures, and also why 2 billion euro is being directed into the National Reserve Fund this year and 4 billion euro next year, because it's the conservative thing to do. This is not the time to be introducing permanent policy changes that we can't afford, especially considering we already have one of the highest public debts per capita in the world. Plus, if what the Commission is saying about the taxation system is true, then the deeper we go into the rabbit hole of extremely generous and costly budgets today, the harder it'll be to fix the problems which need to be fixed in the future. That's just me speculating, but I think that's a fairly reasonable assumption. But I think for me, in budget 2024 and future budgets, I'd like to see more concrete action being taken to secure our fiscal sustainability, even if that comes at the cost of unhappy voters in the short term. Whether that happens will depend on whether or not there's an element of saving face at play, where less politically favourable but necessary long-term changes are put on the back burner in anticipation of a change in government. But I want to hear from you. What are your thoughts on budget 2023? Are you happy with the changes that the government has introduced? And if not, what would you have liked to have seen, and what's on your wish list for budget 2024? Let me know in the comments. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like in the video, subscribe to the channel, and I'll see you in the next one. Cheers.